Hey, what's up?
Hey everyone, what's up?
How was your Tuesday going, Jake? I always have
It's
a
going good.
question, and I'm like, no one can respond yet. So,
Oh, you got to enable the comments.
yeah,
Um, it's going good. It's going good. We launched our inaugural episode of our podcast, the Leader Launch Podcast,
that's
with
awesome.
Ted Adams, who's an agency owner, and we talked about dreams and the power of dreaming. Did you know? Actually, I didn't know this. Google, the entire concept of Google, literally came from from a dream in like that Sergey had, or I forgot the guy's name, but it came from a dream. Isn't that wild? Like in the middle of the night kind of dream.
That's cool. I did not know that.
Yeah.
What
So
part of Google?
I think it was like the search
The
engine.
search engine. Interesting. I did not
Yeah,
know.
thing.
Yeah,
So I
cool.
don't know. Pretty cool. How's your Tuesday going?
It's good. We're remote, as you can see. I don't have my usual office here, so we're actually at the beach this week with my wife's parents. So it's been good.
Pretty fun.
Awesome. But cool, yeah. And I know we wanted to just do some free training, and if anyone's got questions and stuff, you always use the comments. You guys can drop questions about anything, marketing, business, entrepreneurial, traffic, click funnels, late landing pages, whatever you think is useful. Just drop questions in this group. We try and just do this for 30 minutes once a week, just to kind of keep the momentum going. So this week, I know we wanted to talk a little bit about something Jake and I had talked about maybe a few months ago. Like we had just mentioned it in passing, and then today I just was going through some YouTube videos and was looking into like how to fix our accounting a little better. So you can talk maybe more about the book. I've cheated and watched a YouTube video, and you've actually read the book. So.
Well, I'll say, first of all, I think that's totally acceptable for this. The book that Bruce is talking about is called Profit First by Michael Witz. I think it's like Michael Witz. I think it's literally his first name and last name are the same word, but he's just an entrepreneur and speaker. Is that right, Bruce? Is that what it is?
It's Michael Lewitz, I think. And I'm going to drop like a link here to the YouTube video that I watched. So if you don't have time to watch this, check out this YouTube link, and you can just watch like 20 minutes long, and you'll kind of get the general concept of it.
So the reason why I say that the video is acceptable probably is because a lot of the book is like anecdotal stuff. Like it's very like full of anecdotes, and I think you can kind of summarize the core concepts down into a video and into like a short kind of summary. But basically, the premise is of the first section of the book is this guy Michael Witz. He says he's like this entrepreneur. He built this company up to millions of dollars. Like if it was like $10 or $20 million, something crazy. And he ended up one day like realizing that he was broke. I'm kind of summarizing it from memory, but realizing like he had this huge revenue and like almost nothing to show for it in his personal bank account. And so he like,
I think none of our audience like has that problem.
yeah.
Like there's always cash, like your bills always come on time. Like being an entrepreneur is really easy, actually.
Yeah, it's real easy. Exactly. That's why there's a like 70% failure rate in 5 years. And I think honestly, like some of that failure rate, those statistics you hear, it actually has less to do with the business quality and maybe more to do with just managing cash flow. And that's why this is important. Like I think literally the reason a lot of businesses fail is because they don't understand managing cash flow. It's not because they're not good at what they do or that they don't have a good product. So anyways, builds it up, realizes he has nothing to show. He like gives these funny anecdotes about like eating Cheetos, like drinking Bud Lights at 9 a.m., like deeply depressed with himself. And finally he's like, I don't remember the exact story, but he like finally after a few months of that, he's like, I can't live like this anymore. And so he says, I'm going to pay myself first and like then delegate and dictate where the money goes in this kind of really unique way. So he invents this process, profit first. And It's just a very simple and highly effective formula for allocating revenue and cash flow in your business. The difference is he kind of did you see the equation, Bruce? It's like
yeah, and we're gonna cheat, and I'm gonna show you. I'm just gonna pull up. There's like one or two little graphics on this video.
come on, man.
And I could describe it with words, but man, how much faster would it be to just show it? So yeah, and it just basically like shows. This is how it typically works. Like generally accepted accounting practices. You take everything in your operating account. So money comes in. Client, let's say if client pays you $10,000, you then go pay all your expenses. You pay your team, and then whatever's there left over, you're like, that's my profit. And then you try and like pay yourself like from whatever's left over, which isn't so essentially like kind of reverses this whole process. And you still have money come into this main account, but you first allocate money to yourself, and then you pay expenses from that. So it ensures that you get paid consistently. And this is something I think we see all over, because like entrepreneurs typically have like a good heart. You're trying to make it work. You love your team. You're just glad that they're actually like showing up and working for you and doing what you say, and all that stuff. So like there's this thing like, hey, I'm going to pay my team first. I'm going to pay all the expenses. And so you kind of put yourself last, thinking like, that's like the servant way to do it. But you are like the most important person in your company. And if you aren't paying like yourself well, it's just a chain reaction. And we can get into, he actually talks about like how to allocate, like putting money aside for taxes. And we can go into all that, but like essentially there's a way to sort of figure out how much to pay. You can't just like, if you get $10,000, you can't put $10,000 in your personal account, because, the business costs some money to run. So there's a way to kind of take, let's say 30% of it. So you put 3,000 in your account, you put about 30% away for taxes, and then you can keep some profit into like a savings account. And then when you're left, so let's say you're left with about $4,000 roughly, then you pay your expenses and your team from that last remaining $4,000.
Right. It's so simple and yet so powerful, and it's crazy how well it works. Like the thing that I like about Profit First is it's like typically in business, when you implement something new, it takes a while to set up and there's all kinds of strings attached. Like the cool thing with Profit First is you literally, like, we implemented it and like didn't even have to think about it again. Like once you implement it, it's just so effortless to do it, because I literally named in my online bank accounts, I have like 6 accounts, one of them for only taxes, one of them for only operating expenses, one for only profit, one for only owner comp. And what I literally did is I put in the name. You can nickname at my bank like your accounts, and I nicknamed the accounts 5%, like 10%, 35%. And so now when money comes in, I just literally think, okay, this to this account, this percent, and it's like you don't have to sit there and say, well, how much will I need in bills and blah, blah, blah. You just say, okay, this month I am taking 5% of everything as profit, and I'm taking 30% for operating expenses and whatever. So that I just love how easy to implement it is. And like, I love things that are leveraged, highly leveraged. Like this is very highly leveraged. Like it gives you massive reward.
But this is like, it's a silly thing. It's like, hey, well, I feel like there's never money. I don't get paid. Well, then just like the solution is literally, well, pay yourself. Like, why don't you just pay yourself? Have you tried that? Just try paying yourself first. Like, but it is have a logical thing. And we probably need to take like a whole session and just talk about like how to track margin and how much do you like, what your margins are, and like some ways to calculate that well. But it's an interesting thing essentially. And what I found, like I went through, I kind of put it into a spreadsheet, and I was like immediately realized that like we aren't charging enough for one of our services. Like we were it was costing us 50 to 60% of the project was going out as like costs, whereas I need to make that more like 40%. So you can either decrease the expenses, which this is what it takes to get that project done, or we can just increase the revenue to kind of make up and get that margin working. So it is a very healthy exercise. You should do it every so often, a couple times a year, relook at all your pricing. Pricing is so key. Like when you're building a product or a service, like pricing is part of the product. Like, because you can do it something really cheap and fast. You can do something like very specialized and boutique. But anyway, that's something just to look at, and it's it's an easy dial to turn for sure.
Hey, Destiny. So we have the
Greg here. I think
Destiny. We got Greg on the line too. What's up, y'all?
Chris is here as well.
Great weekend.
Chris.
Yeah, finances so important. Profit first, huge. What's something else you learned from the video, Bruce, that kind of was just interesting or stood out to you?
Yeah, I mean, it's, again, like you said, it's very simple.
It is.
It came down, one of the things he mentioned was about the discipline of it, like making sure that you pay yourself at the same time, like if you're going to pay yourself twice a month, if you're going to pay yourself once a month, because so what I feel, and this is, as you it's fine when you're kind of like off on your own as like a freelancer. You start adding people to it. You have a family, you have kids, like everything, like all of a sudden, like you're like, oh wait, like I need to get some sort of stability here. And so that's something just to like getting that consistency. And I have like my whole career, I've always been an entrepreneur. I did have like 2 or 3 years where I was on salary, and it totally changes like everything when you just have money show up in your account. The peace of like mind that brings to just know that that's coming, it hits, you've got everything you need for the month. I was like, that was quite nice. Now you never, like, in my opinion, like you don't really have as much earning power when you're working as a salary, but with an entrepreneur, like you are essentially, you should be making more money, like, because you are working twice as hard. I think there's a quote from Elon Musk, which I need to get exactly right, but he basically is like, entrepreneurs are the only people in the world who work 80 hours a week so that they don't have to work 40 hours with having someone else tell them what to do.
Yeah.
Like, so like which is so true. Like we're probably working like 80-hour weeks and making like much less than the person working 40 hours a week.
40 hours. That's so true.
And it's these little changes, like where do you pull the profit out, the timing of it, how does cash flow work? They're so key. So to me, it was the idea of like this discipline of like just making sure like money shows up, because it's good for you. And to me, like I can kind of make it work. Like I'm super flexible.
Sure.
It's just how I'm wired. But like I do that specifically for my wife, like for my family. Like that's something I know it's a gift to her to like for that sort of consistency. I know like one of my mentors, Pedro, always says like being married to an entrepreneur is like holding on the back of a motorcycle and you can't see anything, just holding on for dear life. Like, that's the best analogy for me.
That's a great analogy.
My wife was with me at the time. She's like, that's it. That's what it feels like.
She's like,
so,
yeah, amen.
Trying to make sure that's not always the case. So
the other cool thing that I like about it is that the profit account that you open up actually is it's almost like it's not a savings account, it's a checking account, but the profit account, like it's not where you actually pay yourself. There's really 2 profit accounts in the system. One of them is your compensation account that like you draft money into to pay yourself weekly, bi-weekly, whatever. But there's this other like profit account, and he says you're only supposed to pay. There might be dirt kicked up in your face on that motorcycle. That's true, Chris. Basically, here's my point. He has this like profit first account that you only pull from once a quarter, every 3 months. And it's like that account, it was so critical for us, so helpful. There was a couple times during COVID where we needed it, and we were actually able, because we paid into this profit account first, we had a reserve sitting there that we could use for a couple unexpected expenses that came up. And then also at the end, you can pay yourself a bonus. There's like all kinds of stuff you can do with it. So I love this fact of having like your compensation owner comp account, but then also having your profit account for the business. And then you can do anything, like you can have it as a bonus and distribute it. You know, you can use it to buy like a piece of equipment or something. So just thought that was super cool as well.
Yeah. And so we've been going through this exercise just because I was trying to like basically firewall our different projects. So like we weren't, what don't want to happen is like, we're getting money in from project A and I'm using that, or I'm getting money in from project B and I'm basically going to try and finance project A that happened weeks ago, like to pay for that team or whatever, or that contractor or the Facebook ads or whatever service thing you're paying for. And so you can, all that happens, you get, it's a domino effect. Like you get, it's a chain reaction. Like you basically like one thing pays for the other, pays for the other, and it just basically always feels like you're playing in like catch up. You never can like quite figure, and then you're trying to like pull money out of it randomly throughout the process to pay yourself. So that's like how I would. So we were basically putting firewalls in place, and we created these other accounts. I created like a payroll account. So if money comes in, say $10,000 comes in, I know that like this project's going to cost, say, like 40-50% of that. So I take 40-50% of that, I dump it into like this payroll account, and now I know that like as that project works its way out, like we are going to have money for that, and then I can keep adding to it. So, and it does create this huge buffer. When you have the cash, like you can kind of. There was a situation even yesterday where I had this account that's been like storing money for each of these projects, and we needed something to make a transfer yesterday, and we couldn't wait till today when Stripe would like deliver the fee. So I was able to like pull money out of that account, pay for something, and then put it back this morning. And just like the peace of mind that brought when you were like basically acting as your own bank, like I can take a 12-hour loan from myself and then pay it back tomorrow. Not that I recommend like messing with the accounts. It's like one of the things they talk about. Like you gotta have the discipline of like putting money aside there and then not touching it. But anyway, that's been super helpful, I think. So, and we had talked about it briefly before, but that's why I wanted to kind of bring it up with our group here, because it wasn't until I kind of got in there and sort of put it into a spreadsheet that I really figured out like how this was going to work specifically. So.
That's awesome, man. Maybe we can do a check-in too, like in a month, and just say like, okay, you've implemented it for a month. Like, what's kind of the takeaways, and how have things improved in certain areas?
Yeah, and it does force you to really know your numbers and be a little bit more disciplined. Like, just changing this. Like, I talked to the person who's kind of our operations, and so I had not shown her any of our numbers, like what our margins were, any of that. But I was like, this is so important. Like, I need her to be watching it and be like, hey, this project, for this designer, for this project, I only have like 15 hours to work with. For this person, I only have 10 hours to work with. And so they can kind of gauge it and speak the same hours of language, like when they're communicating with the team. And so she can help actually make sure we hit this. So it all of a sudden pulled us in the direction of like, okay, here's where we're going, and here's some of the things we have to do to kind of make sure that we hit those goals as we kind of progress forward. And previously it was just like we didn't have that rule. So when you pull the money out, it makes you pay a lot more attention to where the money is going after that, because it's now like an item. So it's not just naturally eating into how much you pay yourself, essentially. So.
Well, and what I like too is that on the topic of expenses, it really does help you to like be conscious of your expenses, because you're allocating a certain budget to expenses, and it's almost like water fills whatever kind of vessel you put it in. Basically, whatever you have in that account, like you're going to basically spend on expenses, because it's much easier to spend money than to save it. So that's the thing I like about Profit First, is that the approach is like you're basically dictating and telling your business, here's how much is going to be spent this month, and it's not going to exceed this, because that's all that we're replenishing into this account. It's a very like proactive way of dealing with finances, I think, where our natural tendency, and I did this for years too, is being very reactive. It's like, oh, like this bill came up, like how can I, where can I pull money from to pay this bill? And with Profit First, it's very like, okay, like this month we are going to spend 30% of our budget on, operating expenses and subscriptions. And then we are going to spend 10% on that profit account, or whatever those numbers are. So anyways, just something to think about. Hope this was helpful to you guys. And it's been something we liked. Greg asked a question: can you do it without opening like 12 different bank accounts? I don't think you need 12, Greg, but you certainly can't do it without opening at least 4, which are, kind of like the 4 key ones that he talks about, which are your profit account, your operating expenses account, your business income that money goes into, and then your like owner's compensation account. But you know, it's free and easy to open bank accounts with most.
It is.
So it shouldn't be too hard.
I'm attempting to do it with less accounts. We had like one account. It was just like everything in there.
Yeah.
You definitely need more than one account.
Yeah.
So we did like checking, savings. So that was always helpful. And then payroll. And then we have like another business venture that we do that Lindsay does for Posture that has its own account. So it can get paid directly. So we're doing it with those 4 right now, and it made a huge difference. And the big thing for me was just the payroll. So if you're paying contractors and stuff, that was very helpful to pull that out. And each of those accounts also has its own debit card. So that way, like we pay Upwork, we pay invoices through credit cards. Like I use that payroll debit card over there. And that way, like if you guys have ever worked with Upwork on big projects, like Monday morning hits and like thousands of dollars just leaves your account, which is wonderful when you're like in this mode of like trying to track stuff. So I was able to connect that to our payroll account. And since I put money from the project into that, I know it's like there and ready to go. So that's been helpful. Just kind of, we'll probably need to put, so what I'm doing right now is I'm putting all the taxes and stuff and all that into our savings account for now. And then I'm just, I'm paying myself kind of as the projects come in. So I'm kind of doing a hybrid approach. It's definitely not following the book the way they tell you to, but I'm working our way towards that.
Sure. Yeah, fair enough. You're working your way there. And it's not an overnight thing. It's not like you, and he even says that in the book. He's like, it's not like you're going to implement this and like everything's fixed overnight. It is a process. But the important thing is, because like he says, you don't know whether you should do 5% profit, 2%, or 10%. Like you just have to choose one and then feel it out. And if you're next month, you're like, okay, cool. Like I have 10 grand in this profit account, but like I'm struggling to meet my expenses. Like obviously you're putting way too much into profit, but the important thing is that you just start. So anyways, hope that was helpful. And yeah, let us know if you guys have any questions, comment on this video or tag us in something.
Yeah, we'll probably talk about this more. I know it's, talking about accounting and budgeting and different tools you can use to budget. Maybe even talking about some stuff you can do personally to budget. And we talked about some of that in another intensive mastermind that we've done. But we'll keep talking and bringing this subject up because cash flow is everything. My dad, who's started a lot of different businesses over the years, he was always said like cash is king. Cash is king. Like every time, like whoever has the most cash, like essentially wins. Like if you can figure out how to manage that cash flow, you can have an incredible business. And it's most of the time, and it's not that like entrepreneurs are like bad at managing it. It's just that like stuff happens. Like you're trying to build things. You're basically investing into new services, and then you're paying Facebook ads, and you're constantly like reinvesting the money back into your business. So it just naturally like deteriorates into that state, and you have to kind of force it back the other way.
Right. It's like you have to be proactive.
Yep.
Entropy, basically, and the rule of entropy.
Yep. That's right. Cool. Well, good. Well, guys, like I said, drop any questions. We can keep talking about this topic in the comments. But I hope this was helpful. And like I said, check out the video. 20 minutes, a much like more logical, presentation of kind of how it all fits together. Yeah, let us know what you think. Let's see if that's helpful or any thoughts on profit first accounting. We'll see you guys next week.
See you guys. Bye.